I'm Carol Roth for Goldline. Given the uncertainty with the banking system and the overall economy, many of the questions I'm receiving are tied to a simple concept of wealth and portfolio management, capital appreciation versus capital preservation. The following content does not constitute financial investment or tax advice. It is being provided for informational purposes only. You should consider any investment based on your own financial position, risk tolerance, and other factors. Please consult your own advisors before making any decision to invest. Wealth comes from ownership. More directly, the ownership of assets that increase in value over time. Asset ownership provides the ability for people to increase their wealth exponentially by several multiples of that original investment. Now, this is something that working and earning alone cannot do. However, each growth opportunity for your wealth involves taking on some level of risk, even when you've been taught an investment is safe. See the latest banking crisis for a real-time example. These risks, which vary in their riskiness, encompass a number of factors, including time. Depending on the day, month, or year that you start investing and those that you measure to, your returns in various asset classes can look more like a roller coaster than a set of stairs leading from the bottom to the top floor. Now, if you invest with a long time horizon, some of that time risk can be managed just by waiting investment cycles out. But sometimes time is not on your side, and you want to make sure that you don't lose what you have. While it is never ideal to try to time the market, short and long-term capital preservation strategies do make sense. This is even more important given the overall financial trajectory of the U.S. and the global economies. The Fed's steep interest rate hikes sit at odds with increasing government spending. Inflation continues to run at historically elevated levels across the economy. Even the banking system is in chaos. The uncertainty with Fed policy, government policy, the banking system, and recent economic data is rightfully making those with heavy equity positions nervous. Now, if you as an investor have a long-term time horizon, if the future is like the past, that may work itself out. However, I have received questions from people with upcoming capital needs. They need to pay their kids' tuition or make meaningful capital expenditures. They're even contemplating retirement. For these scenarios, focusing on capital preservation may take precedence over capital appreciation. Obviously, the specific decisions and actions you should take depend on your personal financial objectives, risk profile, and more. And this is where an advisor can be helpful. Now, the timing is ripe today for preserving capital, and there are many more places to find some yield, aka generate a return on your investment, with a lower risk profile than in years prior. Taking investment capital you will need in the short run and putting some into shorter duration treasury securities, CDs, preferred money market accounts, and similar investment products can yield you several percentage points with a fairly low risk profile. Now, these rates don't quite keep up with inflation, but it may be a good option for some near-term capital preservation. Again, make sure you talk to an advisor who can help you with your strategy and execution, and make sure that any of these products that you consider are insured by the FDIC or a similar entity. Now, some people use gold and precious metals as part of a short-term capital preservation strategy. Not so much for when capital is needed, but to smooth out some of those bumps in their portfolio. Now, in my opinion, precious metals are even more relevant in terms of long-term wealth preservation strategies. The needs for capital preservation over a longer time horizon deals with different issues. The investments used for this purpose look more like hedges to a portfolio. Many of these issues stem from what I believe is the governmental mismanagement of your core dollar holdings. The value of the dollar is being eroded in terms of its purchasing power by the actions of both the Fed and the U.S. government. The dollar's status as the sole global reserve currency is also at risk. These issues are clear ones that call for an immediate focus on long-term capital preservation to be part of a portfolio strategy. Now, there are a number of ways to hedge, and many experts suggest that for long-term capital preservation purposes, investors consider allocating maybe 5 to 10% of their portfolio to alternative assets like physical gold and precious metals. For these purposes, particularly those related to long-term capital preservation, physical precious metals are, in my view, a must. Investing in paper gold is fraught with a whole other set of risks and does not fulfill the hedge needed to combat the issues I have been talking about appropriately. Now, this is not meant to downplay gold's capital appreciation potential, which has appreciated over long time horizons. But in terms of its primary function in a portfolio, the assistance with capital preservation and hedging is where I personally tend to focus. So, speak to your financial advisor about your capital preservation options. And if you need help or have questions around adding gold or other precious metals as part of your hedging and long-term capital preservation strategy, please consider giving my friends at Goldline a call. They are the only precious metals business from which I get my precious metals. And if you call Goldline at 800-319-9533 or visit goldline.com, they have a special offer for their Betsy Ross Freedom Round, designed by me and exclusively available through Goldline. With a qualified purchase, get 1 copper Betsy Ross Freedom Round for free with every silver one you purchase. That's 800-319-9533 or goldline.com. We never know what's ahead, and we can't fully eliminate risks, but we can mitigate them both in the short and long run. Now is the time to look at your portfolio and make sure you have prepared for any short and long-term capital preservation scenarios that you need. I'm Carol Roth for Goldline, and I'll see you next time. The views and opinions expressed in this video are those of Carol Roth and do not necessarily reflect the views or positions of Goldline or its parent company or affiliates. These views and opinions may have been previously disseminated in other media.